Futures trading involves substantial risk of loss and may not be suitable for all investors.
Good morning, it's Friday, August 22nd. I'm Phil Streible, Chief Market Strategist at Blue Line Futures. So I sent out an internal note here to the team just reiterating our bullish outlook on the silver market, with silver consolidating near this $38 level. Our upside target here is $42 to $44. So our outlook is that we're maintaining those higher calls for higher prices. And our forecast for Q1 2026 is $42, and then our estimates for Q2 and Q3 are $44. So we believe that a test of the 2011 highs is becoming increasingly likely because of the fact that silver tends to overshoot due to its high beta, high momentum characteristics. Now, the drivers of this price movement on up to the $42, $44 are the Federal Reserve starts to resume and builds into these interest rate cuts. We anticipate a weaker dollar. We also anticipate stronger economic growth because of robust industrial demand. Remember, 54% of silver's demand is industrial applications here, and a gauge of manufacturing activity showed that factories are expanding at one of the fastest rates in more than 3 years on stronger demand. So if you look at yesterday's flash PMI data coming in at 53.3, that was above the 49.7 expected. Greater than 50 indicates industry expansion. So we're also continuing to see those ETF flows and futures positioning continuing to increase. So we believe that significant pullbacks on the silver market below 36 into pocket support between 36 and 35, those are your opportunities there. So if you look at volatility, well, the option volatility has declined significantly, indicating that once these prices start to approach a breakout type of level, we should start to see significant and elevated FOMO buying when key technical resistance is broken. So you shift over to the US equities here, markets are really searching for direction, with traders holding back on any kind of big bets here as they prepare for Fed Chairman Powell's speech at 9 a.m. Central Time. So looking at the markets as well, NVIDIA drifting lower, down about 1% in the pre-market after a report asked its suppliers to halt production of parts to its H20 AI chips. Now, given the headlines here, the S&P 500 and the NASDAQ are just slightly higher, with the S&P recapturing 6,400, trading at 6,404. That's up about 15 points here, and the NASDAQ at 23,266 here, up about 45 points. You look at the Russell 2000, that's leading the charge here, leading all indices, up about 0.5%. The two that we favor most are, because of the reflation environment and stagflation environment we're going to see, we are favoring the NASDAQ and the Russell. You look at 10-year Treasury yields are anchored at about 4.32%. The September VIX sitting at 1847, very complacent at the moment. Dollar index just little changed at 98.13, and the euro just slightly lower at 116.12. You shift over to energies, we do have WTI crude oil popping up 63.75, taking out previous day's high here and previous few days high to the upside before backing off. We did have a surprise report where we saw the EIA data come out slightly lower than expected here, and we've seen just an increase here, slight increase in demand, little bit of a decline here in supplies just recently. October natural gas continues to be a laggard here, sliding lower below that $3 level, sitting at $2.88. So you look at the precious metals, well, gold is falling here as traders are lowering their bets on outlooks for interest rate cuts coming into this Fed discussion here at Jackson Hole. So you go to the CME's Fed Watch tool, you got a 69.3% chance that the Fed cuts 25 basis points, and you'll note that that's been slipping over time. You go to the level of unchanged, the expectations for them to leave interest rates unchanged, that's been growing here at about 30.7%. You go over to Europe and Asia, well, European stocks, they edged a little bit higher. There's a framework of more of a trade deal between the US and the European Union, and you get the MSCI Asian Index just little changed here. Looking at Bank of America, the flow data, well, money flowed into equities, bonds, and really gold funds this week here, coming in through Wednesday, where crypto had the biggest outflows of about $700 million. You look at economic data, no real significant data coming out here today. You'll have Fed Collins speaking at 8 a.m. That's going to be on Bloomberg TV. I'll cue in on that one. And then you're going to have Fed Chairman Jerome Powell's speech here at 9 a.m. You go to the ETF flows on the precious metals. Well, on gold, they did have a big outflow, one of the largest ones in about 3 months here, but gold is still up about 11% year to date. So they cut about 152,000 troy ounces of gold holdings in that previous session here. Gold is still up about 27% year to date. date, fell by about 0.3% here yesterday. You go to silver, well, they did pull out about 1 million troy ounces yesterday. So they're buying the dip and they're selling the rip. That's just the way the flow data looks here when I'm analyzing these ETFs. So it's about 1 million ounces that had flowed out, but silver's up about 12% year to date as far as ETF flow. So it's going to be a really busy day. A lot of volatility I would expect here coming into Fed Chairman Powell's speech. And I'm looking at a preview of it, is that they're really expecting him to leave this hawkish legacy. And they also believe that he'll do some revisions to its monetary policy framework and move away from that 2% balance target and go into something that's more broad-based here, which is something that they really should be doing here, because inflation, the trend has been working lower here recently, although our guidance shows into the end of the year that inflation should start to see a bit of an uptick as well in this deteriorating labor environment, which gives you the stagflation, which is one of the best environments for gold, commodities, NASDAQ, Russell, because when the Fed does finally cut, that's when the pivot starts to take place in a lot of these different markets. So you got any questions, shoot an email to info@bluelinefutures.com. And remember that futures and option trading involves a risk of loss. It may not be suitable to all investors. Good luck and good trading.